Hey everybody, welcome to the Power Hour. Change this here. All right. The Power Hour, it's an hour where we just take Q&A, and I had some time today, so we're going to do it. And for those of you guys in premium stage, I'm actually going to switch over to community. So for those of you that like Discord, use the community stage. And I'll give people a minute or two to get in here. Needed to end that stage. All right, we're good to go. So if you're in the Discord, feel free to use the community stage chat for any questions, and everything's always recorded and posted. Happy Monday. So welcome to the Power Hour. This starts pretty much just as Q&A. If we had questions to start with, we would start with those, but I don't. So feel free to drop them in the chat. But if you know the strat or don't know the strat, there's no stupid questions. So let them fly. We can also look at specific names and stuff. There's a lot of cool things that happened today, like the MP materials really got moving. NVTS got moving pretty good. Where is it? BBAI got moving pretty good as well. So there's a few things we could talk about there. And yes, it will be recorded. And once we get questions and we can start diving in there, I can tell you guys, as far as what I've been working on recently, we're working to get automatic broadening formations into our scanner. So when you look at signals, you can see how big that range is you're coming back through. So for example, let's use a random example here. We can see, so when we're tracking broadening formations, we always start with a 3 or a compound 3, and they're both 3s, hint, hint. So once we get a 3, we know the lows of this and the highs of this are the top and the bottom of the broadening formation. In this case, they go inside, sideways, then they go up, so it expands and continues higher. Top of the broadening formation. Then you can see it goes up again, top of the broadening formation, then goes red. What is that? This is potential 3, where this bar is potentially going outside of the previous bar, right? It takes 2 bars to happen, but boom. This would be the new 3. And you can see how we have a new target as well down here, since we have the previous 3 to trade back through. So it makes new lows down here. Then you can see it goes green here, which starts a new 3 like this. We have the outside bar where these go outside of this, and then it expands. Then it makes new highs and it goes red here. New 3 like this. And then you can see it gets tracked, making the new lows, then new lows. And you can see rejects, same thing. New 3 again to here, and then 2 to reversal. They're trying to make more 3s. So right now what we're doing is we're starting with the 3s here, but we're going to identify when it goes 2 up in red, because that's a potential 3. We're going to identify when it's 2 to reversal. We're going to track the highs and those lows so we can have a really good idea of the range. And if you've seen my previous indicators we posted and whatnot, like the we buy, the we sell, it's a variation of this, but what this is going to do is actually show you the targets, the reversals, and how far you got. And on here, it's not going to look as impressive, but once you get to the really big 3s, like uranium monthly, for example, we're going to see this 2 to reversal causes a 3 like this. And then you'll see we had the 3 here, which expanded. And then this closed out, the 3 was bigger, it's these 2 bars now. And then it's a 2 again, it's expanding again. So pretty cool stuff we're working on. Hopefully I can have the 2 to reversals and maybe inside bars included by the end of the day after this stream. But that being said, let's see the first question we got. So why doesn't volume matter to the strat? If a bar is going down into a previous bar that has more volume, down or up, it makes me doubt the move even if it's a broadening formation. So the reason is because the volume cannot be quantified. If we put volume on our chart, we don't know what it's telling us. All we know is, more volume, less volume doesn't tell us anything, because you'll have people, let's go to a daily, we're going to probably see more crazy volume. You'll have people who will say, see how the market's going lower and we have this high volume here? It's exhaustion, right? The last guys to sell are getting out. Then they'll say these spikes in volume were bullish. Then it'll go up here and they'll see how this volume is really high into the new highs? That's confirming, that's momentum, right? There's a big buyer in here. So it's bullish. Notice how high volume at the lows is bullish, high volume at the highs is bullish. We can't quantify it. And you could say the opposite. You say high volume at the highs is bearish and you're wrong. High volume at the lows, it's bearish and you're wrong. So as far as, volume's concerned, you can use it. It's just, we can't quantify it. Versus when this move's happening, we can quantify that's a 2-2 reversal on the month. We know that for a fact. That's what a reversal looks like. So we can say that's a reversal. We can also look at previous range and we know, okay, well, this would be the previous range high and previous range low. So we also have further targets to go after. So you can see volume, it'll come if we're right. If you're looking at something, you're like, it has low volume. It's like, if we're right, it'll come. When we posted, this uranium trade in this case down in here, wasn't really crazy volume until way up at the highs. So it's just important to know what you can quantify and what you can't. What some people will do is they'll use volume intraday to identify, key levels in air quotes, right? And you can do that. You go like the ES futures, for example. People will look for a volume spike, and then to counter it, volume spike here and then counter it. But maybe on intraday it'll help you, but because you can use it to say like, well, volume spike, and then maybe it's bullish, maybe it's bearish, right? But for swing trading, so timeframes make sense once you know what they're telling you. If we go to SPY monthly, you can see we made the new low and then hammer month. Notice the high volume, right? So be it, doesn't matter to us. We're going to delete it. But when this breaks, it's a monthly reversal. And a monthly reversal is also, in this case, a monthly rejection. You see how we're rejecting these lows? They made the new lows and they're rejecting, going the other direction. So if it's a monthly rejection and a monthly reversal, we have all month. What else do we have though? Well, once this month closes, we get a new month and it goes green. So it just stayed the same. It stayed green all up in here until last week. It flipped red on the month. We had some selling happen. But if we go to the quarter, this quarter went green here. It lasts 3 months. So if we're going to hold for 3 months or 2 months, right, whatever it is, we probably want that quarter too, because it lasts 3 months. We go to the year. This year above this lasts until the end of the year. So if we're investing, we want to have a green year because we have all year for that to go. So we go to like Oklo. 3, broadening formation, expansion. Where did it expand? Above this, 2763. As long as the year's green, you can swing trade it bullishly all year, right? Anytime the quarter is green, you have all quarter. You'll see the 3 and then expansion's continuing. And then the month, anytime that month is green, you have all month. So if you're going to hold for a year, or 3 months, 6 months, you want to have that yearly, ideally that quarterly as well. Right? If you're going to hold for a month, you at least need that month. So if you're going to trade and hold, like you want to hold, right? This is how long of a hold? 183-day hold from the 2-2 month signal. You need that yearly as well, because in order for it to trend up, 183 days, 6 months, that year has to be green. Or at the very least, that quarter's green, which it was. So what you'd want to use is the quarter, month, year. Then you could use the week. So if we look at that, we looked at the year already. It's like we know it's going up. So on a weekly basis, 2-2 reversal here, 2-2 reversal here, 2-2 reversal here, inside bar signal here, right? You can see as a weekly guy, you can get in and then you can hold with the monthly, quarterly, yearly guys since you have the rest of the year. That's how you would think. If we look at this, you can see we get a 3. It expands up, expands up, expands up, expands up, expands up. It's like, that's how we want to trade it. And then all of these reversal signals create 3s as well. No. With penny stocks, Strat's even better. So if we go to like, we don't have pennies that we're actively watching, at least not myself. But if we go to like QBTS, right, it's moving like a penny stock. It's up 80%. The reason it works better is because the Strat signals identify losing traders. So anyone short in QBTS here, you can see we have our 3, and it expands down. When this goes reversal, these guys who are short are about to get blown out of their short. Boom. Right? Same thing happened in here today. These guys were short, goes inside, expands down, it makes a penny lower low. When this reverses, boom, back through this broadening formation here to make new highs. So you can see if we're identifying that broadening formation, we can take it back through the losing traders in the direction of, you go to the quarter, you see the quarterly, how it's chugging along, the year, see how the year's going. You can see how that yearly kicked in. Broadening high low, expands down, and then the reversal here back through the broadening formation. So when you're trading penny stocks, like things that are really moving, the Strat's even better. The more volatility you have, the better. So if we go to SPY last week, Friday, puke, right? And then we can start trading those 2-2 reversals right here. Boom, wrecked. And they buy it up a little bit, 2-2 reversal here. Boom, takes them out. And then they chop them up. And this is low volatility, starts contracting. And then eventually you'll see we had the 2-2 reversal here. Boom. Right, you can see how there's 2-2 reversals in this case. We also had the 3. Sorry about this indicator. But when the volatility increases, when the signal breaks, you have more traders that are involved in that move. So those signals become more powerful. Versus, you can see when volatility was lower over here, it's still moving. Yep. But each of these 5-minute bars was like $2 in here. Each 5-minute bar over here is like 30 cents. So you can see it's like once the volatility gets big, then that 5-minute time frame becomes more important. Versus you look left over here, these 5ers, although some of them are going to cause movement, what's important is those higher time frames, the 60, because volatility is a little lower. So you can see the 2-2 reversal here, boom, 2-2 reversal here, then the volatility picks up, kills them. Was today choppy? Yeah. Inside day. So what happens when you go inside? Well, you can see the broadening formation. We had a 3, and then we had a 3. So we had 3, 3 on SPY, and then 1 stuck. So you have volatility expansion, volatility expansion, volatility contraction. Because 3s, when they happen, they show expanding volatility. And you can see it's not always just directional. Right? You get a 3, then it expands down, and then it expands up. So right now we have the broadening high and low, but we're stuck in the middle of it. So we're going to start a new broadening formation in here, more than likely, but we'll see. Moving averages, use the parabolic star. This was found to be better than moving averages for, investing. And because of that, it also is likely better for holding winning positions. So like if we go to the daily 2-2 reversal here, we can buy that. You get the 3 expansion here. It'll trail you all the way up to here, and then it breaks down, and then you make your decision. Are you going to get out, reduce? Are you going to add more? Right? In this case, 2-2 reversal, add more, goes up. You see it trails up into here. So it probably triggered down at 66320 or something. But what this will allow you to do is, like, if we go to a weekly, clear this out. You can create winning trades here, here, and anywhere in here. And you put your stops even once it leaves. So if we play this, let's just say this outside bar expansion. So we're long against this white line. Once it leaves, we can go break even and wait for this to catch up. So our break even stops, our stops are here. And then once it catches up, we now trail our stops. So our stop moves up like this. And that's how we can use them. They're not entry signals. Failed setups are broadening formations. So we play both ways. And the way that works is like this. So for example, inside bar signal / setup. 3. 3s are more likely to happen after inside bars and after signals because the rejection of a move is stronger than the initial move. So what does that mean? This is like a really key concept. I'm happy we're talking about it. Well, it means this. When we're looking at previous highs and previous lows, which could be last week's highs and last week's lows, or it could just be pivots, whatever you're looking at. It could be the same idea. You'll see the breakout of this range is $2. The rejection of that from this high to this low is $10. So if we know rejections are always bigger, right? The breakdown of this range was what? 96 cents. How far is the rejection of that range? 24% and going. Actually went 43%, 44%. So rejecting is more bullish or more bearish than actually breaking out. Therefore, if a signal fails, that is also a signal. So if you have something that has full time frame continuity up and then it goes shooter down on the day, but then the day goes green, that's more bullish than if it were to just go 2 up on the day because it's a 3. So think of it like this, right? Let's say we're looking at Figma. And we'll just go replay mode so we can have those opens. To show you. So the month opens here, the day opens here, the week open is here. Now Monday is going to open, right? Monday, the new week opens, the new day opens, and the month opens here. So you can see the shooter broke down. It did hit its target, which creates a 3, new highs and new lows here to this bar. And this occurred on news, right? But it's just an example. When this goes green on the day, it is rejecting. So how far did it go below yesterday's lows? It went $1.23. Once it's back above, it's more likely that it's going to move much more than $1.23 because the rejection is stronger. It moves 10 times bigger on the rejection of yesterday's lows and the daily magnitude, which would be the previous day's lows, Thursday. So you can see the rejection is what we want to play. Now, when you trade rejections, you can use inside signal to cause rejection, right? So it breaks this high, then we go inside signal right here. It rejects, goes much bigger to the downside. It breaks this low, 2-2 reversal, right? We can see just on the initial rejection, it went down 96 cents. From this 2-2 reversal, it rallied $4 to make new highs, and it hit its target. So timing the 2-2 here, timing the inside bar here gets us in those rejections. Now, when we go to like a 2-week chart, notice that 2-2 day is rejecting an inside bar down. So we're rejecting the inside bar breakdown with a daily reversal signal, which gives us a target on the 2-week chart to actually go and take last month's highs out here. As we go to the month, that 2-2 day signal is rejecting last month's lows. So it went 96 cents lower, and then the rejection was $22 to the upside, 44% gain. Down 2%, up 44%. So this is how we want to think. So we pan W just as an example. Let's say we have this 3 on the month and we're like, wow, that's a really bearish looking chart. we make new highs, we make new lows. The thing we know is it could look really bullish if it starts rejecting lows, because the rejection's always stronger. So in this case, it drops 4%, right? We could have been short in that. But then it goes green. Now we have to flip long because the rejection is likely to be bigger than $8 and it rejects 20 bucks intra-month. Then that rejection is still occurring. Two. So they started buying here, they're buying here, they're buying here. So this rejection actually from this low to this high is a $52 rejection of the previous month's lows. If last month was an inside signal or a shooter, the same thing can happen. So hopefully that answers your question on failed signals. So if we look at inside days or weekly signals or whatever it is, you can see shooter day signal on Q, it didn't break, rejected the break. Right now, it didn't take last week's lows. But if we look at the daily, you'll see we broke these previous lows, the low of the mother bar. It opens inside in green above the day, the week, and the month open. That's full time frame continuity. So we're rejecting Wednesday's lows, right after taking Wednesday's lows out, with full time frame continuity. So how far did they go below? $1.95. How big was the rejection? $14, 20%. And the rejection started occurring here above 74.11 when continuity changes. So rejections start when continuity changes. So a 2 down in green or an inside in green, that's could be the start of a rejection, bullish. Reversals occur after that. So the reversal occurred at 77.39. Then the target was to make new highs. For scalping futures, the 60-day, week, and month are your best time frames because we have to know where the rejections are. So in this case, the month, you can see goes up 66 points, rejects 200, or actually from the highs, rejects 266 points down. Now, did it go 3? It didn't, right? Still red though. So we can still have this marked out. The week is the week rejecting anything. It's inside in green, so technically, right, we had an outside week, and now it's inside in green. It has firmed up, so maybe they take last week's highs. However, we have a lot of distance. We're still a 1. So there's no rejection on the week because we're a 1. The day is a 1, so it's not, rejecting anything on a daily, or not reversing would be a better term. Now, in this case, we made new lows by about 50 points. And you can see it's up 170. So they rejected the new lows, but they didn't reverse. Reversal would be above this. So it's lower highs still, higher lows still. So what's going to happen? Since we're not rejecting the week, not rejecting the day, the month is doji at this point, but it is rejecting last month's highs. Today and this week, it's sideways as far as we know. So during the week, what we're going to look to trade would be rejections until that changes. So we can see it goes into new highs and then rejection. Goes into new lows, rejection. Goes into new highs, then comes back in a little bit. Until we can hold above and out of, or below and out of this range, which is going to be Monday's highs and lows. We can just mark it out. Until we can get outside of this to start the week, it's going to be a mess, right? Because we're going to go up, down, up, down. It's going to be sideways. So if you're a scalper, right, you have to know that. Because if you don't know that, you might be trying to play bullish breakout to the upside and you're just going to lose your money. Now, once you know their inside day, your inside week, all that stuff, the same thing's true. You just want to trade rejections. So when we look at a range, we don't want to play stuck inside where you can see, right? All of these bars, see how they're all within this? And then we're still an inside day and inside week. So this is going to be a mess, right? There will be rejections, but it's just not going to be moving very much. So if we look at this high and this low, you can see all these candles were stuck inside. Then we get a rejection, which does break it. So it goes breakout. Once it makes these new highs, right, you can see they rally about 10 points. And then they drop 30 points off the highs. So we prefer just trade this rejection. Don't mess around with, any of this stuff inside. Then you'll see, all right, slight lower lows, slight lower highs. Then we make lower lows. You can see they drop about 3 points. And then the rejection is 34 points. So you're still going to be trading the rejections intraday, but you have to know, right? Once it goes and makes this new high, we don't have, a ton of evidence to say that's going to be going still. Versus if we had like MP, notice this month, bright green, it's going up. This week, 2 up week and green. So it's going up this week too. The day, 2 up and green. So if we're playing this, we know today, this week, this month, it's going up. This quarter, this year, it's also going up. It's also straight into all-time highs. It's one of the really strong ones. So for an intraday guy, we would like to trade rejections in that direction, right? Right now, they already closed. But you can see after hours, what did they do? New lows, right? They moved 43 cents lower. After hours, they're already up 2. Now in the morning, it's going to be quicker because with volatility, like we said, lower time frames become more important when volatility's high. In this case, they move 6% in the first 4 minutes of the day. Volatility's high, right? Now, when we look at these rejections, you can see it goes down $1. It does go up and slight down, but then they still hold those lows. After going down $1, it goes up 6 or 5.50, right? So you can see we want to time it into higher time frames versus, higher time frame inside day, inside week. It's doing nothing. And then when you do that, right, the parabolic SAR, like we were saying, this is probably one of the better ways, if we're going to reject and we're just going to hold it all the way up right here, get out or reduce if you want to hold it for the monthly guys and whatnot. What time frame is best to get into a trade? Depends what you're doing. You have to have a trade plan. Are you an investor? Are you a swing trader, day trader, scalper? Do you just trade news? Like, what are you doing? Now I can give you generic advice since the question is generic. The best time to get in is when price is rejecting and you have a reversal. So your best looking chart will look like this. New low, setting up a 2-2 reversal. If you don't know what that is, looks like this. 2 down, 2 up reversal. So you can put your stops either against these lows, up higher against the bars lows, against the open. Right? The tighter you put it, the more you're going to have to be willing to stop out and get back in, stop out, get back in. But it allows you to really reduce your risk when you do that. Then the first target's always this green line. So one of the best looking charts is this. When it breaks above this high, that's our entry. Our stop can be the low of this bar, the open of this bar, midpoint of the previous bar, the low of this, doesn't matter. Tighter's better. And then if it can close up and out of these highs, you hold. That would be the best looking chart we can get. The boot camp we don't have up anywhere right now. I can put JD Light. There you go. Futures? Yeah, but futures is not a trade plan. Futures is an asset. Are you investing in futures? Are you swing trading futures? Day trading futures? It's going to be this. It's just you have to pick a time frame. Like if you're going to be, let's say you're day trading the futures, you can use the 12-hour to find your range for the day, as well as the day, the week, the month. And then you can work your way down to the 60, 30, 15, 5 minute. If you're trading the weekly, you go by the monthly reversal. Yeah, so if you're going to trade, if you're trading weeklies, what matters is the month, quarter, year, because that's going to give you your higher time frames. And then does that week reverse or does it stay good? So, for example, Oklo 2-2 week 76.02. When that breaks, the month sure if this is right. 76.80. The month was green, right? Closer to going 2 up. The quarter is a 3-2 expansion, something we like to trade. The year is a 3-2 expansion. So you're trading expansion on the year, expansion on the quarter, weekly reversal into that expansion. So you can see 2-2 creates a winning trade. That's a scenario 3 on the week, these 2 weeks outside of this week. So now if it's really going to take off, we need to go expansion of this scenario 3. Once it closes out, right, this 3 is now expanding. It's getting bigger. And you can see the expansion of this 3, crazy stuff. So you line up, you're like, I'm going to trade weekly. I'm a weekly guy. It's like, I need the weekly signal and the quarter, month, year in my favor. That looks good with signals, with 3 2s. The quarter is a 1. You ask yourself, what's the next 2? Do I have a magnitude to change it? So previous quarters, highs and lows, that's your previous range, right? Are we going 3? No. Are we a 2? No. So we know it's sideways. The month is a 2-2 to the downside. This is a potential 3 to take this out. So we have the month. The week is a scenario 1. So this week, that seller is not selling as far as we know, but it's not a reversal. The day is a 1. So tomorrow, if the day breaks up, the week is still going to be inside. Let's say the day were to go Strat 2 up in red tomorrow. That could take last week's lows, which could confirm the month and then take monthly target. So in order for this to go to the target, we'd need a 3 tomorrow. Or we could get a Strat, which would be a 2 up, 2 down reversal. We need a 2 going 3, or a signal to cause that to happen. And if you're a weekly guy, it's inside week down. You can see how the 3. So you had a 3 here, 1, 2 down. This 3 actually got bigger. The indicator's not plotting it right. But this is now your 3. Like this. So now we're a 1. It's not going anywhere. So that seller's gone for now, hasn't reversed. If it's going to keep going, we need to get below last week's lows. You would need signals to do that. URA on the monthly failed too. Yeah. So 2 going 3 that runs out of time, and therefore, it's a failed 2 going 3. And we call it failed because it's a rejection. It's like, we wanted it to go lower on uraniums, and then it goes green. It's rejecting. So they failed to go lower. XRT. So you can see it's a 2 down month, but it's not below last month's lows. So what's happening right now? It traded down $2 and it's rejected 275 so far. So they are rejecting, but it is 2 down month. The week is an inside week, so they haven't reversed the week. The day is an inside day, so they have not reversed the day. So if they're going to firm this up and reject last month's lows, at minimum, they'd need a daily signal here. If it fails, if we gap up tomorrow and we start going red, it could go Strat, right? Where maybe it goes outside in one day. And then it continues, or it goes 2-2 reversal, not tomorrow, but the next day. Right? So if that signal works, does firm up, maybe it changes the month, rejecting last month's lows. If it fails and starts going the other way, then it's a 3 the other way. We can trade that too. So we trade both sides. And we'd prefer downside because the monthly target is down in here. So if we could nail it there, maybe a day take them all the way down. We'll have to see. Would you be looking at time frame after? Okay, Amazon. So it is a 2 down, but it's green. So right now it is rejecting on the month, right? They traded 47 cents lower, and right now they're up $4. But that could change back to red. We go to the week. 3 inside and green. So we're rejecting, right? We took out, we'll see Monday, September 22nd lows, whatever that week's lows was. And then they're rejecting currently. The day, still inside. So we don't have a reversal yet. If they were going to firm it up, it'd be inside day reversal, but you would still be an inside week. What I would prefer, since we took last month's lows, would be the rejection of this inside bar to the downside. Because if it breaks up and goes $2 and then it rejects, it might go, 6 to the downside, 9, 10, 20, whatever it ends up being. Should he be looking at time frame after the 12-hour, or would that be considered? I'm not sure what that question means. You can use the day, week, month. The 12-hour is good for identifying the range. And what I mean by that is just use the previous couple bars. You can look at it and say, okay, inside 12-hour, I'm just not going to trade it. And then 3. Inside 12-hour, I'm not going to trade it. And then 2. Then you can see 2-2 reversal 12-hour hits its target. So this hit its targets, this hit its target, 2-2 reversal, that hit its target. Inside 12-hour, we're going to wait 3, right? And then inside 12-hour, we're going to wait. Now in this case, right? Nowhere near taking out these highs or these lows. So that's less likely to, finish them off. In this case, they go up and they reject it. So maybe they take the lows out. We got 20 minutes left of the 12 hours, so it might be on the next bar. APLD, yep. APLD, look at the month. Boom, magnitude hit. So we gave this to everyone in our Discord. It's about 150% gain up at the highs. And notice, where did this rejection occur? Previous year's lows, or actually, nope, not last year's lows, but you will see this on the quarter. Right here, 550, that's where that rejection started. It still is going up 600% from that. So see how it broke down $2 and then it rallies $36. That's a rejection. And we gave it to everyone here. 1543 because this rejection was still occurring at 33, 27, whatever it was, which gave us that 155 at the highs, currently up 122. MP was a really good one too. Yeah, so MP, we identified this. You can see the rejection started here, rejecting 2023 lows in 2025 when the reversal occurred here at 2401, giving us a magnitude to go into these new highs. Notice they go down 445. From that low, they're up 88. So a $4 rejection turns into 88. And you can see SPY with the China news, a 1 penny rejection of yesterday's highs turned into a $21 move. So it doesn't matter if it's 1 penny or $10, $100, it just matters that you're rejecting. A 3-2 expansion and exhaustion risk without benefit of hindsight. Does it reverse or not? Confirming and negating. So think this way. If we have an outside bar that looks like this, if we are above the high of that, it's expansion. If we are below the high of that, it's a rejection. Now, if we're looking at the trend, this rejection occurred from down here. So if they're going to reverse this trend, they would have to take price all the way down here to reverse it. So if you're biased, right? Let's say it breaks up. It's a 2 to the upside. So it is a trend up. If it goes red, that is a rejection, right? But is it anywhere near taking the previous bar's lows out at this point? No. So if we're long this, we can risk more money. Like we can have our stop lower than that. We could say it's still closer to, it's slightly red, whatever, flips green. That's an expansion. I like that. Right? If we're biased to the upside, because it's a 2 to the upside. So as long as it's above that previous bar's highs, doesn't matter if it pulls back. As long as it's above it, that expansion is occurring. And then so long as that bar is open, it's still expanding. So what matters is not, are we right here? Did I perfectly get this 1 penny above this and I get this huge winning trade? If we're watching a yearly, a quarterly, monthly chart, we don't have to get it here. We just have to know, is it occurring? Is it an expansion or is it a rejection? And then where are the trades? So if this was our quarterly, for example, so our quarterly looks like this. We can buy it here, but as long as it's above this, we can be bullish. During that quarter, within this bar, what does like a 60-minute look like? Well, it looks like this. Right, so the 60's going, goes down. So during this quarter, if this was the previous quarter's highs, the trigger, we don't have to get it perfectly at that break. We can let them come back, form a rejection, where once this starts going green above this, after we make the new low, we can put our stops here and get into that. Now, if we're a quarterly guy, what we'd likely do is have an entry here and a stop, either the low of this bar, or some people use the midpoint of the 3. Now, I'm not the biggest fan of that because we know where rejections happen, right? It's like if it's 1 penny below this, I'd prefer not to hold that as a long. But if you have a different time horizon, right, and you're willing to give them some room, perfectly fine to do. But if we have, like if we go to Oklo, we go in the year and we just look at this. You can see first month of the year, they break. Second month, they continue. I missed it. Right here, hammer. This rejects March's lows, which gives us at least a target to March's highs. So this monthly rejection where it trades $4 lower, and then it trades $158 higher, gets you into the yearly, right? And you could have even traded this one, right? New lows to the month, comes back in, rejection. Then you have your 2-2 reversal here, get in there. So what we can do is we can say, okay, I'm long this month, and then it closes out. Then it goes up, I'm still long. Comes back in as a rejection, I'm going to reduce it. So I buy it from here. You know, maybe we don't get a perfect fill at the highs, right? You can, but let's say we get a bad fill, it's here. We make $20 a share. If you reduce that position by half, our stop can go $20 below where we bought it down here, and we can continue to hold with a break-even stop right here, where if it stops us out, we didn't lose anything on the trade. So we can trade the rejection, make some money, reduce, and then you can hold. You can use the SAR to trail it if you want, right? And then you'll see a new signal sets up. We can take that rejection. If we stopped out of the previous one, so be it, whatever. We can take the signal. Our stop is going to be somewhere, you know, around this white line, maybe slightly higher, maybe slightly lower. It doesn't matter. And then in this case, right, it goes up. Maybe it comes back and you reduce half. That's fine. And then you just hold the rest. We just want to make sure we create a winning trade, and then we can widen the stops up. We could say if the year is green, I'm just going to keep my stop at the yearly open. If the quarter is green, I'm going to keep my stop there. You can pick whatever you want. Hopping? Okay, let's take a look. So he said, my friend is with me and this maniac has 400K in it. Well, look at the year. Right now it is a 3-2 expansion. How long do you have though, is the question. Well, you have 2 months left. That doesn't mean it only has 2 months and then it's going to reverse. It just means after 2 months and 19 days, next year, it needs to take out this year's highs and keep going. If this expansion is true and your friend's right, what it will look like is like this, where it keeps going. We target that. If it starts rejecting, it may come all the way back through. So you just want to defend. If he has a ton of money in it, I don't know where his average is, but what we'd want to do is when the new euro opens, you can defend it with a monthly, right? So you can put your stops here, 237. So you could say, as long as we're above this high, I'll put my stops here. Maybe it retests it, maybe it doesn't, but we want to stay above 282, or else it could turn into a rejection, right? Where it goes up 80 cents. And if it comes back in, you know, it could drop $4, who knows? But you just want to see that not reverse, not come back. 1.47 average, that's perfect. So let's see, 1.47. But we take a look, he bought, and this is why it's a winning trade. So 2 down. So it made 1 penny lower to last month's lows. It went green as a rejection. And then he bought slightly after that right here. Perfect. He's in. 2 expansion up. Then it goes sideways inside. And then 2 expansion. 2 expansion. So he timed that beautifully. If we were the monthly guy in here, we'd just trail it up to this. Right? 227. And you really don't have to worry unless you're below 282. Is how we'd think. So if you could say 282 is my supports, right? I want to see him stay above that. Yeah. Well, what you want to tell your friend is like the big winner will just keep going, right? If he's going to get copping on a monthly and it looks like this, right? You get the rejection, it goes 800%. Notice higher lows, higher lows, higher lows, and then boom, reversal. That was your first one. So if this is right, you get all these higher lows, it'll just keep going. If he's a quarterly guy, you can watch the quarter as well. Yearly guy, you can watch the yearly higher lows. It's just how much risk is he willing to assume? But that's how we'd want to think about it. So since I traded weekly, should I only get in a weekly trade if there's a daily setup to get into it? No, you don't have to do that. It's all built in. If you're going to take, like if you're looking for weekly outside bars, it's going to be 60 in daily signals, right? But if you're taking weekly signals, then you're just going to manage that like a weekly signal. So you can take the weekly break, your risk changes. So like, let's just say, for example, if I take this weekly break, my stop is $8 to play that. So like we can do that, right? It moves $7, so $11. It's not bad. However, if we wanted to reduce our risk, we'd have to go lower. So to reduce that risk, you'd have to go to a 60, 30. And the key is not in the weekly time frame if you're swinging weeklies. The key is when the weekly happens, what happens to the month, quarter, year, or what is happening. Heikin-Ashi, no. It's pretty much just a moving average in candlestick form. So if we just look at this, we have a 3 here, we have a 3 here, we have a 3 here. Those are important levels to us. We change this to Heikin-Ashi. Does show a 3 here, a 3 here, and a 3 here. But you see how they look different. If you wanted to, you could do that, but I would say at best, you could use it like a moving average, similar to the SAR. And that'd be fine. But you can see how these levels are not going to line up. So like what you could do is you can use the broadening formation. You can time those entries on a normal chart. So let me just show you kind of an example of that. So SPY on the week. See how this inside bar closes and it looks different here and here? Because it's an average. I believe it's averaging the high and low, which puts it in the middle. That's kind of what it looks like. I'm not 100% certain on the back end of this type of charting. But you'll see it goes outside bar reversal. So we can buy it here. And in fact, we alerted on this. When this goes green, we can buy it here. And then you can simply trail it up that Heikin-Ashi if you want, right? Green, it's all green up in here. That'd be perfectly fine. But I wouldn't want to look at this for entries, although, you know, it looks like it is possible to use it the same way. It's just going to be delayed. So you're going to be getting worse fills. Now I get this off my charts. Got about 7 more minutes. basing contracts. So it has to do with, do we expect it to move quick or not? So let's just go to IDBM, for example. So one way, and this is important for day traders, is we want to have pivots where you can see if this breaks, it triggers this, which triggers this. And then if it keeps going, it triggers this and this and this. And you can see pivot, pivot all the way down. So this range with pivots in it, we're going to come back through that quicker versus a range where we don't have pivots, just on average. It's not a rule. The idea is just we want losers. We need to come back through people who are in the wrong side. So the more pivots you have, the faster that can move, is how we think. It also has to do with, your higher time frames. If it's up 20% this month, it might go another 20%. So when you take a signal, it may go 20%, right? It may double how far it's gone. Because if you're going to go 100% this month, it has to go 10, 20, 30, 40% first, right? So speed has to do with how much higher time frame evidence do you have in the form of the day, the week, the month, the quarter, the year, how long those bars are, green or red. And then the pivots that you have. How many pivots do you have to come back through? So if we go to uranium, we're just going to keep going back to it because it's a good example of a lot of things. You'll see pivot, pivot, right? So it breaks the signal, which causes movement. And then we have further pivot, 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 pivot. We have all these pivots to come back through, all these sellers to come back through, so it speeds up. And then once it's up and out of there, anyone who's sold, they're now chasing it higher, covering shorts. And you can see, why is it going higher here really fast? Well, if we look left, you have all these pivots that we started trading back through on the left. We're just going to mark out the pivot highs. But you can see how we're triggering more people into losing trades. And it's not like, oh, they were short in 2012, they're short now. It's more like uranium goes up, I'm going to get short here and my stop's going there. Or I'm going to get short here and my stop's going here. We're taking those guys out. As well as, if anyone is short uranium stuff, we're taking those guys out too. But hopefully that makes sense. We like previous range to come back through and long red and green bars. It's like once you see this monthly long green bar, it's already on. Like you got a big buyer in here. Now it's just a matter of go trade those daily weeklies into it. Failed twos that don't continue, trade the ones that have continuity. Trade them at the tops and bottoms of ranges. Like if we go to SPY on a 60-minute basis, do you see how we are stuck? Right? This high, this low, right in the middle. So what's going to happen? Everything's going to fail. Goes, you can see 3 cents lower, rejection, $5. Makes a new high of day and takes this pivot target out. Comes back in. Then it goes inside. It's rejecting both sides now. Back and forth. Makes a new low. Rejects. Right, so it goes down 50 cents, goes up $1.68. Makes a new high by 23 cents. Rejects. Right? So when we're stuck in the middle, it's just going to keep doing that. When it comes to twos that reject on bigger time frames, we want to time them back through a previous range. That's really the key. So like when you see this 2 down in green, is it back through a previous range where these guys are short? It is. Take all the shorts out, right? You'll see when it goes 2 down here, it goes green again, and then we have shorts from yesterday to take out. Boom. And then gap down buy. And now notice they get to the highs. There's no more shorts to take out, so there's profit taking going on. And the buyers, it gets really slow in here. Right, then you can see we have 3, takes them out. Then this buyer gets taken out, which takes these buyers out, all these guys, in one go. So the key is the bigger the range is. Like when this happened on SPY, it went 3-2 down day. That's a range expansion, but you also have this, all this stuff to come back through. You can see, right? All of this goes outside bar to this. NQ, you can 12-hour, 4-hour, use them all. 12-hour, use the 4-hour, use the day, the week, the month. The more, the better. Because imagine if you're trading a 60 rejection during a monthly rejection. That triggers a weekly reversal, right? Or we could say it differently. Imagine you're trading a 60-2 reversal after we took out last month's lows, and that 60-2 reversal could trigger a daily reversal after taking last month's lows. That's a rejection. So you use the daily reversals to cause it. So the more you can line up, like if we go to US 500, we can see what happened, right? I'm not saying we traded it short here, although that would have been nice. We got it short more down in here. But regardless, this rejection on the day, you see it goes up, comes back in. You see lower highs, and then it reverses here. This daily reversal is the daily reversal that rejects last week's highs. So when it rejects last week's highs, if it's a daily reversal, it's trying to take last week's lows down here. So when this went red on the week, we're like, oh yeah, that could change, that could do stuff, right? Now, can we be wrong? Yes, but that's why we use those smaller time frames. So when this week goes red, we know the day is a 2 down. So there was the reversal there to cause it. You had all the pivots here to make that go faster. The 60, you can see this 60-minute rejected, right? 2 up, 2 down reversal after new highs over here. That week, we go back. See how the day, the week are red? When we get down to it, see how this 5-minute goes 7 points above the previous 5-minute highs, and then it starts coming the other way and goes 35 points into new low day, and then it keeps going 80 points. Right here. When it ticks up and starts coming back, if it's going to take the weekly target out, since the week is rejecting 2 up in red, we can time this 5-minute rejection back into it. And rejection is just reversal, right? So we had like a 3-minute. You see inside 3-minute, reversal occurs here. Boom. So it goes up, and they reject the guys who bought it, takes them out to the downside, and causes the month to go red, which you can see that month flipping red with the day and the week red. All day they're selling. So you're just going to do that all day. Now in this case, puke, sideways, puke, and then consolidation, puke, consolidation, puke. So when it's consolidating in here, that's where you have to be more aware. Is the 30-minute goes inside bar. You don't want to trade that until it's a 2 so you can reject. You can see it goes 1 point higher, 38 points lower. And then it makes new low a day. We're not going to short down there. You can see here it goes 10 points higher, and then you can see it drops 132 points lower. So we're trading that in the direction of the day, the week, the month. And in this case, we were also rejecting last month's highs, right? But with the inside day we got now we're not sure. We'll have to see. Reclaim level. So it's just knowing that 3s occur. So reclaim level. Does it only work if price touches it, or do you have to wait for the close of the candle back inside? If a 3 looks like this is what an outside bar looks like. The second it goes a penny lower and it goes green here, that's what's trying to happen to target this. So the second that happens, right? On a lower time frame, it might look like this. Ticks down, goes green, and then goes 3. The second it goes green here, it is rejecting that low. And since it, let's say, moved down 10 points, it's likely to go 10 points further the other way. So 1 penny is all you need. And you can see this is, if you want big time frame moves, you need the big time frames that are rejecting. So if we look at the quarter, when it's green in here, right, I believe it might have been an inside bar. I think it was. So it was inside, which means it wasn't rejecting last quarter's lows. It's just retracing the previous quarter's move. And then it came back the other way, which is why retracements are not reversals. Got to know that. But we take this out, and then we go green here. anytime that's green, now we can play the 60 rejections, daily, weekly, any signals in the direction of this for 1, 2, 3 months. You could do that. And then here, you see they make new highs to here and they get some rejection. When that starts coming back in, now, if we're going to take longs, we have to know if that's red, not a good thing. We have to change it. If it doesn't change, you know, we prefer not to be holding longs in there if we're trading as a quarterly guy here. Then you see it goes down. So it's attempting to go 2-2 reversal and take this out. But the second it flips green here, that's now the rejection the other way. So you can see this rejection in here, this rejection in here, and this kept rejecting all the way up till we get a new 3. Then you'll see goes down, green here, rejection, still going as far as we know. Nothing's guaranteed. Yes, you want to use reversals to cause it. Because, okay, think this way, right? If you are like a year, let's say you're the yearly guy, right? So the year, let's say it looks like this. If we want to buy it this year, which we could, we'd have to change that. So what would like the monthly, let's say the weekly time frame, we'll start at the month. During this year, maybe the month looks like this. Goes up to start the year, rejection, goes down, comes back in. So if this was going to go higher, what would it do? It'd go green first. Then it would reverse, rejecting the previous lows of the year. Then it would change the yearly open. Then it would take everything out. So you're going to have this reversal occurring after the change in continuity or the change in the monthly color here, which changes, let's just say the yearly open was here. So we can use reversals or rejections, however you want to frame it, to change big time frames. Because if you're going to have, let's say we're going to have something that looks like this, where it goes inside and then 3, which is one of the things we look for. The 1-3 up or the 1-3 down, which has our targets in green, ideal entries in black. In order for this to happen, that has to look like this first. Right? And then a change in color has to occur in a lower time frame. And then a reversal has to occur that changes this color. And then it has to stay that color. So when we're looking at this, if we're going to end up with a bar that looks like the Rev Strat, the 1-3, let's say this was a weekly. The daily would look like, we'll just draw the weekly bars out. The daily would look like this maybe. Maybe it goes inside day, breaks lower, goes green, and then goes reversal. So let's say this was Monday, which takes out the new lows. Then Tuesday reverses to target this on the week. So the daily reversal causes the weekly rejection, or the weekly scenario 3. Now, if this was the daily, what does the 60-minute look like? Maybe it looks like this, right, where it's going sideways, which would be that inside day. Then the inside day breaks lower and they go down. And then they reject the lows. And that sets up the daily signal like this. And then maybe the 60 ticks down, goes green, which causes the daily signal. So you can see if this was the weekly we're aiming for, and this goes green ideally, we have a daily signal that alerts us to it. And then if we're looking for something before that daily signal, it would look like this. In this case, 3. They make new lows, go green. Then we have the 2-2 reversal, 3-2-2. Which comes back above last week's lows. Then, to trigger this daily hammer, this daily reversal, it makes new lows, and then it flips green here. Then it reverses above these guys, and then it keeps going, continues, and it continues. Once a new low or new high is made, we don't know. So you should be confused because we don't know. You can have a chart that looks like this. It goes 1 penny higher and then boom, changes. You have to know that happens. So if you know that happens, when you see it happening, you can say, I know what that looks like, right? When it goes slightly red here, I know that could change things. And then you want to do that with full time frame continuity, because when you can look at it and you can say, puke. When it gaps down, it goes green here, starts coming the other way. It's like, well, I know what that looks like. It made new highs here and then it made new lows here. I know what that looks like, right? Then you can see the inside bar. When this goes inside bar, and then it makes new lows, but it comes back in. I know what that looks like, 3. And then it goes 2 up, right? Keeps going. 2 up, keeps going. The key is the rejections are how we can enter trades. But when we're exiting, we would prefer reversals. So the gap down buy on the week here, those are ways we can enter. As far as exiting those trades, we'd prefer to wait for reversals. So if we're already in a trade, we don't have to worry about every rejection that happens or every, 2 up in red, 2 down in green that happens. What matters more to us is, has it reversed? So when we look at this, you'll see it makes new lows and then higher lows, higher lows, higher lows. And then here it reverses. So it's like if we bought it here, which we did, we can hold it until the week reverses. Once the week reverses, then we have to make a decision. Am I going to keep my stop break even? Right? I'm up 10%, give or take, about 10%. Am I going to keep it even? Am I going to reduce the trade by half? Am I going to fully exit the trade? And those questions are answered not on this time frame, but by the trader and by higher time frames. It's like, are you an investor? If so, when that week reversed, did the month reversed? No. So if you're an investor, you have the month at least. That's not reversed. The quarter, is that still a 2 down in green, still rejecting this quarter? Yeah. So I don't have to get out of the quarter. So if the month is telling me, well, it's not reversal month, I don't have to get out. The quarter is not a reversal down. It's rejecting to the upside. I don't have to get out. The year is a 2 to the upside in green. I don't have to get out. So we can look at those higher time frames and say, should I hold on to that position that I made off a reversal? Or should I get out? So let me go to QBTS. It's a good example of one we took right here. So you can see they buy it all the way up. We don't have to be the first one because we know what a rejection looks like, what a broadening formation looks like. New lows, 2 reversal. What's that doing? Rejecting the lows. Goes down 95 cents. We're going to look for much more than that in the other direction. When that occurred, you'll see the month was green. The week was still red, but this rejection, if it's successful, will change that. They change that. Now everything's green. So if we're a daily guy, we can walk it up on the day. Doesn't matter if it's 2 up and slightly red here, we can walk it up, right? Until it reverses for a daily guy. So we'd go like this. Low, 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 boom, reversal. Now I have to do something. Am I going to reduce, hold, or exit the trade? Those are the 3 things that you can do. Now, if we go to the week, did it reverse the week? Technically, no, right? It's still a 2 up week. Did it reverse the month? It was still 2 up month. Did it reverse the quarter? No, it's still 2 up quarter. So we still have evidence to say, well, I can just hold it break even. Because what happens if that buyer comes back in a day or two when the day can change back to green, right? And then you'll see they make 2 cents lower. The reversal occurs today. That buyer came back. And then we made new highs. Now we don't know, right? But what we do know is the week is 2 up. Month is 2 up, the quarter's 2 up, the year's 2 up. So you could just decide to continue holding and walk your stop up or use the parabolic SAR, whatever you need to do. But hopefully that's making sense, right? Just depends. What type of guy are you? You're going to hold for the daily reversal? You're going to hold for the week, month, quarter? Are you going to use the daily reversal to get in? And then when it reverses, you reduce by half and then you put your stop, at a weekly reversal or monthly reversal and just give it more room to try and go? That makes sense? All right, guys. Well, we went about 13 minutes over, so we're going to call it quits here today. On Monday next week, maybe we do this again. You know, I've been doing it a few times. But hopefully you guys enjoyed, and, you know, feel free to watch it back. We'll have it public on the YouTubes. But adios, and have a good rest of your day.